Hi, I'm David Stein of Money for the Rest of Us, and in this video, I explain the trade war between the US and China. Last week, the Trump administration announced an additional $200 billion of tariffs against China at a 10% tariff rate. That means if a product is imported into the US from China, it could cost another 10% in terms of its cost. That's on top of $34 billion of tariffs that were applied just a couple weeks ago at a 25% rate. China responded by applying $34 billion of tariffs on US exports to China. That's a trade war. Now, last year, China exported way more to the US than US sent to China. So US sent around $130 billion in exports to China. China exported to the US $506 billion, so the overall trade deficit was $375 billion. Why is it that China can export so much more to the US than the US sends to China? Well, one reason is China just has a much lower cost of living. They're able to produce goods cheaper than they can in the US because wages are much lower in China. Everything is less expensive in China because they have a lower cost of living. And that gives China really an advantage in terms of producing goods that are then sent to the US. The second reason, it is way easier now to import from China. You can go on the website Alibaba.com and find hundreds of thousands of goods that you can import. And Alibaba provides insurance against quality, against essentially not getting your goods sent to you. So price protection, quality protection, shipping protection, that's all free. And so there's not a whole lot of risk to import from China anymore. The third reason that China is able to run such a huge trade deficit with the US is that at times the Chinese yuan, the currency, has been weak relative to the US dollar, and so that's given China an advantage because overall their goods would be cheaper. Now, President Trump has said trade wars are good and easy to win. Financial columnist Martin Wolf says, that's not an absurd statement, because if US actually puts tariffs on $250 billion worth of goods, the reality is China's only importing $130 billion worth of goods. So there's not $200 billion worth of goods or $250 billion that China could put tariffs on. And so they run out of ammunition in this trade war. Here's the thing to realize, though, with global trade. It has significantly reduced poverty. The Economist reports in 1981, 42% of the world lived in extreme poverty. So extreme that they barely had enough to eat. So really less than $2 a day. Now, it's only less than 10% of the world lives in extreme poverty. What's caused that? Well, global trade. China has become a huge manufacturer. There's three economies, US, Europe, and China, all manufacture about $2 trillion worth of goods each year. In the early to mid 80s, China hardly manufactured, certainly not at that level. How do you measure that? So, for example, in 1990, China produced per person about $1,526. That's called GDP per capita. What was their output produced per person? About $1,526. And by 2017, it was $15,000, or over $15,000 of goods produced per person in China. So 10 times as much. We compare that to the US. US produced about $37,000 of goods per person in 1990, and by 2017, it's $54,000. So the US has grown, but certainly not to the extent of China and other developing countries in terms of their ability to produce and export. And that has definitely reduced poverty. But there's been a cost. There's also been a benefit. The benefit is the US income per person has actually risen. So there's an economist named Warren Mosler, and he brought up an interesting point. He says, yes, when you import from another country, that costs jobs. But it costs jobs in the same way that replacing workers with machines, such as vacuum cleaners or power washers. He points out that 99% of farming jobs have been lost because now 1% of the population can produce enough food for everyone in the US and still export to other countries. And so the reality is imports cost jobs just as automation costs jobs. But he points out, even though that's the case, 90% of workers in the US aren't unemployed. There's been new jobs, service jobs, jobs that are higher paying. And so when we look at the income per person, has actually gone up in the US. So in 1985, real income per person was $22,000. Now this is constant dollars, so it doesn't have any impact on inflation. So it's an apples to apples comparison. So $22,000 in 1985. In May, it's $39,000, the average income per person. So overall income has gone up per person, even though poverty has gone down and trade deficits are huge. But here's the cost. Real wages for a worker, real weekly wages, was $312 in 1984 for US workers. By first quarter 2018, it was $350. So the real wages have only gone up 12%. Meanwhile, income per person has gone up over 70%. What that means is that wages for blue-collar workers are being held down because of all this global competition, including from China. The spoils of global trade have really helped very poor countries, and it's helped people that don't work in manufacturing in the US, people in the service industry, white-collar workers. Overall income has gone up because as a nation, if income per person is higher, then we're wealthier. But it's cost jobs, certainly in the manufacturing sector, and it's also really held down real wages because of all this competitive pressure from overseas. And that's why we have a trade war. Trump is seeking to reduce this trade deficit, have a more fair trade deal. Now, we'll have to see how it turns out. If he just focuses on the trade deficit, one of the things Martin Wolf points out, the way to lower a trade deficit is to have a recession, because then households don't buy as many imports and it reduces the trade deficit. That's not what we want. So we'll see how these trade wars turn out. Companies are already adapting and making changes to adjust to the tariffs because trade is really complex. It's a complex adaptive system. Companies have these global trade networks they're going to adapt. We'll see how the trade war turns out, but it's caused because there's a huge trade deficit and because it's essentially held down wages of blue-collar workers, even though everybody else is wealthier. So we've had some income inequality because of trade. So hey, if you have any questions, you can put them in the comments of this video. Thanks.